Are you thinking about investing in real estate, but you don't know where to start? Well, this is the video for you.
My name is Quentin Hardy, aka The Qualifier from New Res Home Mortgage. And I am licensed in New York, New Jersey, Connecticut, Pennsylvania, South Carolina, and Florida, so I can handle your mortgage needs in any of those places.
And I think you guys know who I am. I'm your favorite New York realtor, Evan Saint-Gerard, Keller Williams Realty Landmark, Team NWE. I work in Queens, Long Island, Brooklyn, the Bronx. So the purpose of these videos, we want to give people options. If you're purchasing a house, we have programs for you. If you think about investing in a home, you already own a home and you want to buy another one, or you want to buy one for your kids or get your kids started basically investing in real estate, this is the video for you. Quentin, the floor is yours.
Yes, we have one of our specialties is we have some special products that are proprietary to New Res. I work for a bank. We're a direct lender. We have over 3 million loans that we service with big servicer called non-QM loans. QM stands for qualified mortgage, and it's a governmental issue on which loans are qualified and non-qualified. But what a non-QM loan does is allows us to use alternative documentation to qualify a person. And one of the really popular non-QM loans that's out there is called the DSCR loan. The DS stands for debt service. That's the important part. Okay. Where essentially, rather than looking at a person's income, which generally when you get a mortgage, we're looking to make sure that you have the ability to repay the mortgage. It's called the ability to repay law.
That makes sense.
It makes sense. You got to be able to pay it back. But a debt service loan, we're not looking at the person to repay. We're looking at the property itself. Okay. So let's say that you are buying a investment property that's going to kick off $3,000 a month in income. Well, this is not exactly how it works, but then a debt service loan might say, okay, great. That means the mortgage can go up to $3,000 a month because the property itself can pay that much, regardless of what the person can pay or not. This is very useful for people who maybe have complicated tax returns where not all of their income flows to them personally or they can't show it. Mm-hmm. So the DSCR loan, very, very, very popular, excellent for a lot of people who are looking to buy investment properties.
I'm thinking of questions that people are going to ask basically as they're typing. How do they qualify for this?
Well, you can't be a first-time home buyer. We want to see that you've got some experience. Mm-hmm. If you are a first-time home buyer, there's other programs and we can have conversations on how to make it work.
So let's
but
say
it's
that
exclusively investment properties, and you have to have decent credit. If you have excellent credit, the DSCR loans.
What is excellent credit?
Figure if your credit is over 740.
Okay.
If you've got that over 720, over 740, the interest rates on the DSCR loan is actually lower than, right now at least, lower than a full document loan.
At the time of this recording.
At the time of this recording, because it does fluctuate. So if you're looking to buy a property and you're thinking, oh yeah, I'm going to go to one of the big banks and get a mortgage and show all my documentation for this investment property, you might be better off calling me and finding out what the numbers look like on a DSCR loan.
Okay.
You don't have to show your income. And unlike when you buy a home with a Fannie Mae or a Freddie Mac loan, you cannot put the property in the name of an LLC.
But this one you can.
The DSCR, you can put it in the name of an LLC, which again, a lot of investors, that's what they want to do from the word go.
All right. I think the next question I have is pretty much, does it only work basically if you're buying here in New York, or can you say you're living here and you're buying a residential?
Wherever you're buying, we don't. Okay. You don't have to live near your residential property.
Okay.
So last month I closed one in Florida. This month, last week we actually closed one in here in New York, and it doesn't matter where those people live.
What if it's like a multifamily? Can you do a multifamily?
That's fine.
Okay.
1 to 4 family, no problem.
Commercial, no?
It's for residential properties, not commercial.
All right,
yeah, I'm a
good
residential
to know.
lender.
All right, so that makes sense. So if you are thinking about investing in a 1 to 4 family, you don't feel like you have options, this is an option that you might want to consider. Right. This is the gentleman that you need to...
There's one other non-QM loan. I'll switch hats to talk about this
Switch hats, go ahead.
So,
it's a man with many hats.
We have another non-QM, it's the same category, it's called our Smart Series, but we have one that's also very popular for people who are self-employed. And I'll give you the rundown.
Oh, please.
Last month, speaking to somebody, they said, okay, I'm talking to my accountant, this particular person owns a couple of restaurants and a car wash. So they've got good cash flow. And I said, I was claiming X amount of income on my taxes, and I wanted to talk to my mortgage guy. Can I get away with claiming less? We went over his numbers, and I said, you can't even qualify for what you already own. Forget about this $800,000 home that you want to buy. You won't qualify for it based on your income tax income, what you actually show. I said, however, you are self-employed, so we can use something, the DSCR loan that we just talked about is called Smart Vest. Because it's an investor.
Gotcha.
And this one's called the Smart Self because you're self-employed. You have to be self-employed, but we will say, we'll go off of your cash flow from your businesses. We'll look at 50% of the revenue and 50% of the revenue is your income. So now you can have total payments, including your mortgage, your cars, whatever else in your personal name, up to 50% of that.
I'm so happy my coach pushed me to go outside my comfort zone and talk more about different financial options for my clients, for anybody who's out there listening. And I'm like, this man brought this idea to me, hey, let's talk about investments. I'm like, okay, let's do it. Yeah. Since we're here, we got the camera, we got the crew, let's do this. So great, I'm so happy basically.
That program, like the Smart Self for people who are self-employed, the one I just closed last week, that any other bank that gentleman went to, and they looked at his income, he's going to be denied. He just doesn't show enough income on his tax returns. But if you're self-employed, you very much know that what your income shows up on your tax returns is not necessarily how much money you control. And it doesn't mean you're doing anything illegitimate. That's just how reporting works. But so we've been helping people get homes who otherwise would have been rejected by any other banks who do not have non-QM programs.
All right, the whole purpose of this is to give you options, and the next step is for you to give us a call with your questions and scenarios. So, Quentin, how can we reach you?
You can give me a call at 516-614-4088. That's my work cell. Or, of course, you can email me at, hopefully it's down there somewhere, quentin.hardy@newres.com. That's Quentin, Quentin like Tarantino, Hardy, Hardy, like the Hardy Boys, at newres, NEWREZ.com.
And before I give my contact information, I also want to give him an opportunity to plug his books. So I firmly believe in generational wealth. So as you're buying an investment for yourself or you're teaching your kids how to invest, you might want to give them some books for them to start reading. So what's the first one you want to point out?
We've got 3 different books. You can buy them on Amazon or reach out. I'm happy to share these. We give away free copies to our clients all the time. One is called How to Be a Superhero Home Buyer in the Long Island Market. For first-time home buyers, we have How to Buy Your First Home Like a Superhero and A Guide to Becoming Homeowners for African Americans. Yes, it is different for us. And here's a funny story that you don't know. The person who was the editor on all of these books is a gentleman named Kai Hardy, Qai. He's my youngest son.
Okay.
He bought his first home in October of last year at the age of 23. The average first-time home buyer is 47 years old.
Get out of here.
He bought his house at 23 because he read these. I made him read the books. He was editing the books.
That's what I want. That's the message I want to be putting out there to the parents. Please, parents, grandparents, uncles, aunts, whoever it is, it's very important basically that we teach the young about home ownership. It's great to have cars, it's great to have jewelry and all that stuff, but having the house, owning a house, and then buying other houses, whether it's here in New York and other states. If you're not even sure what state you want to buy, if you're living here, you want to buy outside, talk to us. We can tell you basically, hey, let's put a plan together and see what makes sense for you. Obviously, talk to your CPA about your financing. You can talk to us about your financial options. And my phone number is 917-975-5985. And you can reach me at Instagram, Facebook, LinkedIn, YouTube, TikTok. I'm not dancing. And you can also go to our website, which is mynyhomesales.com. And again, if you found any value out of this, please feel free to share it with your friends, your family, your cousins, your aunts, your barber. Sorry, everybody.
It took me a second.
I had to make him laugh. No, but seriously, I hope you got some value out of this, and please share this with everybody. I can't look like I wish I could, but I can't. I'm like, so whenever I got left, my hairline's going back, way back at the time. Can't help myself. Anyway, I hope you got some value out of this, and seriously, if you have any questions, that's what we're here for. We're here to answer your questions, any scenarios that you have. There is no dumb question. Just talk to us. Let's have a conversation. Start with having a conversation. So pick up that phone. Pick up your iPhone or your Google phone, preferably your Google phone, and give us a call. And that's about it. You got the last word.
Go buy a house.